Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday the 5th of April in London. I'm Stephen Carroll. Coming up today, from firebrand China skeptic to presidential pragmatist, Argentina's Javier Milei softens his tone on Beijing in an exclusive Bloomberg interview. The Fed's Neel Kashkari floats the idea of zero rate cuts this year as markets look ahead to US jobs data. Plus, pumped up, the price of oil tops $90 a barrel as escalating Middle East tensions spook the markets. Let's start with a roundup of our top stories. Argentina's president, Javier Milei, has told Bloomberg he won't change existing trade and financial ties his country has with China. It's a marked change in tone for the libertarian leader, who's previously likened Beijing to an assassin. Editor-in-Chief John Micklethwaite asked him if he still stood by those comments.
As for the Chinese government, what we've always said is that we are libertarians. And if people want to do business with China, they can carry on business as usual. What I said was that I wouldn't be aligning with communists.
President Milei added that he had no intention of touching the $18 billion currency swap between the two countries. China is the biggest source of foreign reserves for the beleaguered central bank in Buenos Aires. Chinese trade and investment now drive large swathes of Argentina's economy in sectors from commodities and energy to banking. Minneapolis Fed President Neel Kashkari says interest rate cuts may not be needed this year, especially if the economy remains robust. But he didn't completely rule out rate reductions.
Wouldn't say they're off the table, but they're also not a likely scenario given what we know right now. If we continue to see strong job growth, if we continue to see strong consumer spending and strong GDP growth, then that raises a question in my mind, well, why would we cut rates?
Neel Kashkari doesn't vote on policy this year. His comments come despite a majority of Federal Reserve officials penciling in 3 rate cuts in 2024. Cleveland Fed President Loretta Mester thinks the central bank is nearing the confidence level needed to start lowering rates in the coming months. Meanwhile, the Chicago Fed President Austin Goolsbee is downplaying higher than expected inflation readings. He maintains that January and February's numbers don't change the broader picture of cooling price growth.
I still feel like if you look at the broader economy, it doesn't really look like broad-based overheating. Those labor market metrics are coming back into better balance. So I still think if you take a longer arc, inflation's coming down, and we're going to get to 2%.
Austin Goolsbee from the Chicago Fed speaking ahead of the monthly jobs report due out from the US later. Bloomberg economists are predicting a drop in March hiring amid muted wage growth. The European Central Bank will embark in June on a steady yet gradual path of interest rate cuts that'll run at least through the end of next year. That's according to economists surveyed by Bloomberg. Respondents anticipate a quarter-point reduction in the first rate cut, which is currently at a record 4%. That's at next week's ECB policy meeting, or rather after next week's ECB policy meeting. Economists believe similar moves will follow once a quarter, taking the rate to 2.25% by late 2025. Israel has announced it's opening new routes for humanitarian deliveries into Gaza. It's after the US President Joe Biden told Israel's Prime Minister Benjamin Netanyahu to allow more supplies in, and attacks on civilians and aid workers are unacceptable. US Secretary of State Antony Blinken says America's future support for Israel depends on their actions.
If we don't see the changes that we need to see, there'll be changes in our own policy.
It's not just Blinken and the White House having concerns. Bloomberg's learned that the British Prime Minister Rishi Sunak and his Foreign Secretary David Cameron are weighing cutting off arms sales to Israel after 3 British aid workers were killed in Gaza. The pair are waiting on legal advice to help win over pro-Israeli cabinet members who oppose the change. The price of oil has continued its rise past $90 a barrel as escalating tensions in the Middle East drives prices higher. Crude is up by 18% this year amid geopolitical risks as well as OPEC Plus's supply restrictions and healthy demand. The latest jump higher comes as Israel has increased preparations for potential retaliation by Tehran after Monday's strike on an Iranian diplomatic compound in Syria. And the British billionaire Joe Lewis has been fined $5 million and sentenced to 3 years probation, but avoided prison time for insider trading in the US. The former Tottenham owner shared illegal stock tips about his companies with friends, personal assistants and romantic partners. Prosecutors had been pressing for a jail term, but the 87-year-old's lawyers urged the judge to be lenient due to his age and philanthropic work. In a moment, we'll bring you more of our exclusive interview with the president of Argentina, plus look ahead to today's US jobs report. But as it's Friday, I've been reading the Top Shelf Drinks newsletter from our colleagues at Bloomberg Pursuits. And a story that caught my eye is about the Bordeaux wine producer Mouton Rothschild and how their latest Mouton Cadet line of wines are being aimed at younger drinkers, many of whom are turning away from alcohol. In fact, the CEO describes them as the wines of tomorrow. So they've been developed thanks to some of the Gen Z Rothschild winemakers who had input into their development. Their names are also on the labels of the red, white and rosé wines. Principal characteristics: they're organic, they're vegan, the overall style lighter, fresher and juicier than those who may be used to the regular Bordeaux wines from Mouton Cadet. Our colleague Ellen McCoy has tried the wines. You can read her verdict in the Top Shelf newsletter, which you can find by going to bloomberg.com/newsletters. Well, let's bring you more now of that exclusive interview with Javier Milei, the president of Argentina. He's been speaking to our editor-in-chief, John Micklethwaite, about a wide range of issues, and in particular his country's relationship with China. Milei has promised to curb ties with Beijing if elected, but Argentina has deep financial links to China, which include being the biggest source of foreign reserves for the central bank. John Micklethwaite asked the Argentinian president if he stood by his comments last year in which he called the Chinese government fascist.
What we've always said is that we are libertarians. And if people want to do business with China, they can carry on business as usual. What I said was that I wouldn't be aligning with communists. And that's precisely one of the things. Who did I say I was going to align with? The United States and Israel. Do you have any doubt that that's my alignment, United States and Israel?
No, but in fact, you have a very good example at the moment, and I'll come back to Israel and the United States later. But now, as you know, in Argentina, the focus is on a Chinese space station in Patagonia that your predecessor allowed to get built. The US says that the space station has military purposes. Will you close it down?
Well, the point is this. Negotiations are beginning to audit and inspect that, because the Chinese say that is not the case. So we will move towards a situation, we will be looking at that, so that is not a problem either.
Is a factor in this the fact that you have that $18 billion currency swap line with China, which you do need? You need it for the reserves at the central bank. It's a big portion. Does that influence your thinking on China?
That situation has to do with an agreement that was entered into and which has to do with the trade exchanges between countries. I won't modify trade exchanges because I think they're trade exchanges between privates. Just as we have a part in our central bank, they have, of course, their central bank counterpart. I don't see a problem. And honestly, the trade relations haven't changed. Not a problem.
The problem would be if I was the Chinese government and you called me an assassin, I might be less keen to renew the currency line.
Have trade relations changed? They haven't. Not one bit. So that is actually counterfactual. There's no truth.
That was the president of Argentina, Javier Milei, speaking exclusively through a translator to Bloomberg's editor-in-chief, John Micklethwaite. And you can read more from that interview on Bloomberg.com and, of course, on the terminal. I wanted to bring in, though, Bloomberg news editor Jill Deesis for some analysis on this. Jill, this is a moderation of Javier Milei's previous position on China. How has Beijing been playing this relationship?
Well, Stephen, I think what you're seeing here is Milei really coming to terms with what several other leaders in South America, including Brazil's Bolsonaro, have, which is China has tremendous influence and, in fact, a lot of financial currency when it comes to its relationship with these nations. I mean, you just heard John Micklethwaite point out there the importance of that $18 billion currency swap line. It's, in fact, the largest source of foreign reserves in Argentina's central bank coffers, making it incredibly, critically important there. It's become the biggest UN swap line in the world. And then there's also obviously several other important key points of investment that China has in Argentina that make it so important. Most critically, there's a lot in the way of trade for food, soybean supplies, and of course lithium as well, which of course is critical for China to use for battery production. So I think the totality of this relationship, this economic relationship, is really important. And when you're Argentina, you're dealing with inflation of 276%. You've got a history of sovereign bond defaults. You've been dealing with 6 recessions over the last decade. It's really difficult to just suddenly untangle yourself from this incredibly important economic relationship.
Yeah, how important is Argentina, though, to China and its broader investments in Latin America? Is this about Beijing trying to rival US influence in the region?
Yeah, Stephen, it is a bit. And look, I mean, the U.S., American companies in particular, have really kind of started to pull back from South America and Argentina in recent years. Argentina in particular has really turned off some U.S. companies because of how politically and economically volatile it's become. But China's really just, held in there all the way. I mean, you look at ICBC has, buildings all over the city, signs everywhere. You're really, you've got these really, really important, critical, financial centers in Argentina that China's really kind of pushed into. We just heard a bit about major infrastructure projects, including that space station, which are also critically important. I mean, China right now, it's the second biggest buyer of Argentina's imports behind only Brazil. And, again, it's also an important client for those soybeans, which China needs to feed its pig herds. It's important as a player in the lithium rush in Argentina. So, and ultimately, Argentina also just recently signed on to China's Belt and Road Initiative, this, multi-billion, if not trillion-dollar program that China's really using to kind of, create influence, particularly among the global South. So I'd say that as a, strategic partner in the region, Argentina is incredibly important to China as well.
Okay, Bloomberg editor Jill Deesis in Hong Kong, thanks very much for bringing us your analysis of that exclusive interview with Argentina's Javier Milei. Now, after a busy week of Fed speeches, today's non-farm payrolls report will give us a clear indication of the situation facing policymakers. Bloomberg Economics is expecting a slowdown in job creation with 187,000 jobs added in March. This comes after Neel Kashkari from the Minneapolis Fed said that interest rate cuts might not be needed at all this year. Bloomberg TV anchor Kriti Gupta is with us to help us understand all of this. Kriti, let's start then with the jobs report, the data point we've been waiting for. We learned yesterday that jobless claims rose in the final week of March. Are we expecting more evidence of cooling?
Yes and no. There seems to be some divergence when you look at Wall Street, which I think makes this jobs day a little bit more interesting. The consensus has been fairly boring for us journalists, but I think this is important because I'm going to take the Bloomberg Economics viewpoint here. They're predicting 187,000 jobs increases. You have the likes of UBS, for example, the investment bank, they're expecting something like 240,000. That is a big, big range just between those two. Add in some of the other firms, that range gets even bigger. The consensus here is that we're coming right back to normalization. What is normal? Pre-pandemic, 200,000 would have been kind of the beacon for normal. The fact that we're seeing estimates for far above that suggests that no, cooling is not what's expected, especially in line with some of the really hot inflation prints that we're getting. Now, I think the reasoning and the rationale behind some of that is interesting. Bloomberg Economics in particular making the point that you're starting to see divergence in what type of jobs are getting the boost. You're not seeing this broad expansionary story. You're seeing it, for example, more service sector led versus more education kind of led, for example. So fewer teachers are getting hired, more hospitality workers are getting hired. And that's really a function of where the spending is occurring. Wealthier people are spending on services. Less wealthy people are feeding into the decline in sales and therefore the layoffs.
At the same time, Kriti, you've been talking all week about how we've been having this feast of Fed speakers. Neel Kashkari, one of the latest at the banquet. Now, he doesn't vote on rate policy this year, but he's pushing a more hawkish message than some of the others.
A feast. Thanksgiving came early, didn't it? They are. And it's interesting because you're starting to see that divergence, again, from the FOMC speakers get even bigger. Now, Kashkari, I think, is a great kind of beacon to look at because there's speculation out there of, did he move the market yesterday? Did you see that sell-off come in the stock market in the U.S. session from Kashkari's comments that he doesn't think a rate cut is needed at all if you do actually see inflation continuing the way it has been. So basically a sideways move in inflation. Now, keep in mind, Kashkari is one, a known hawk, so this is not surprising to hear from him, and also not a voting member of the FOMC. Nevertheless, he has been right in the past, so some people are kind of viewing him as some sort of Jim Bullard kind of figure. But then pile on the comments from the Fed's Harker coming out of Philadelphia. Loretta Mester making more comments as well. And still you are seeing that divergence. The Fed's Harker saying we need more data points. We have time before we have to act. Loretta Mester saying we do, but also, and I think that kind of divergence is what's making the markets really challenged in terms of pricing in even what the reaction of today's jobs report is going to look like.
Does that set us up then for a very exciting day with the jobs report?
It does. I'm at the edge of my seat.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.